Right now, stock market is booming, silver is up, gold is up, Bitcoin is way up, home prices were still going up. The economy is seemingly booming. So why would we see a crash in real estate? First, the stock market is not the economy. It's good to remember that. Secondly, it's being artificially propped up right now with all of this current stimulus. We have to ask ourselves what's going to happen when that stimulus ends. Also, gold, silver, and Bitcoin, these are typically hedges against economic distress. Now, if you're betting on real estate based on that notion that everything is going up and the worst has passed, you may want to listen to this video today and reconsider your position. Huge Wall Street investor groups, they're already betting against the housing market, particularly in Canada. These are the same groups that made billions in the last housing crash and are now shorting these Canadian bubble markets in a big way. So here's the top 8 reasons we'll likely see a real estate crash in the near future. So number 1, real estate is and always will be directly tied to jobs and income growth. So unemployment increased more in 3 months during COVID than in 2 years during the Great Recession. We remember how bad that was. Now the government is painting a very rosy picture of people returning back to work, but the unemployment reports, when you really look at them, are very understated. And when the numbers are adjusted to reflect a more realistic scenario, unemployment rates might be over 17% and potentially growing in the future. Now, if 1 in 5 people in all of the U.S. are unemployed, this is obviously going to have a negative long-term impact on real estate. Number 2, GDP right now is horrifying, and it's estimated to fall 32% in the second quarter 2020, according to the Atlanta Fed. Now, that's been reduced from an over 50% drop estimate that was back in June. GDP, for those of you who don't know, that's gross domestic product. It's a monetary representation of all the finished goods and services in the country over a specific time period. Now, does anybody really think that the entire economy going down by 50% is going to have a positive effect on real estate in the USA? Number 3, this is the obvious one. COVID, we're seeing a second spike right now. We're seeing increases in many states throughout the USA. Now, the US has some of the worst numbers, as many of you know, in the world, and this continued social unrest is not helping things. We are artificially propping things up with record low interest rates, but there's really nowhere to go from here. That can has been kicked so far down the road, and we are already in trouble. We were in trouble long before COVID. Number 4, almost 10% of all mortgages in the U.S. are in forbearance right now. 4.7 million mortgage holders either reduced or delayed their monthly payments recently. Now, you know how many people fit in a giant sports stadium? About 50,000 people. Take 100 of those stadiums. That's how many people are behind on mortgage payments right now. Now, the rosy side of the story that we're given is that about 90% of those homeowners have at least 10% equity in their homes, and that pretty much protects them from foreclosure. But how much equity will they have if and when real estate markets drop by 20% or more? Now, keep in mind, 1.4 million people were already behind in their mortgage payments before COVID. This was a problem that's only been exacerbated by COVID. And number 5 is evictions. Now, if evictions are not addressed, this is going to be in the tens of millions. And where do people go when they're displaced from their homes? They go into the public during a pandemic. Now, that's undoubtedly going to increase transmission of the disease. Now, a study from the Federal Reserve Bank of Cleveland found 44 U.S. cities, eviction filings by landlords have pretty much returned to their usual levels pre-moratorium. Now, more COVID equals more tough times equals more COVID. It's a vicious circle. So evictions are bad, but what will happen if they place another moratorium on evictions? Many people dream of being a real estate investor and owning properties. What happens, though, to you if the government adopts this mass eviction moratorium? Now, while this is a great thing for society overall, if you are a new landlord who is reliant on rent to pay your bills and pay your mortgage and potentially pay the utilities, you're going to be in trouble. Now combine that with the value of your rental properties dropping in price. Real estate begins to look a lot less appealing. That said, if you time things right, there certainly is going to be a lot of bargains that are coming in the market, just like there was back in 2008. Now, if you don't over leverage, you don't buy at the peak in a bubble market, real estate has been a good bet overall. Now, in a recent video, we showed how rental properties outside the city can be found for as low as $30,000 that are yielding $750 a month in rent. Those aren't bubbles, and you're pretty safe investing in something like that no matter what. Now, another consideration is taxes. Somebody has to pay back the trillions that the government is now printing. Will we see a significant increase in property taxes, particularly those that are not owner-occupied? We can only speculate, but Toronto already suggesting an almost 50% increase in property taxes might be required, which leads me to the fact that people are already leaving the cities preemptively. And in a study of nearly 4,000 wealthy investors, 46% were reported to be leaving the city for less populated areas. Remote working is way up, so people can live anywhere that they want to. Now, we left the city a while ago, and while I didn't expect a pandemic, we were overdue for an economic correction. Now, I'm going to post a link above and at the end of this video of how and why we now live outside the city. And last but not least, printing money cannot last forever. We've got stimulus checks, corporate bailouts, trillions of dollars that are conjured up out of thin air and added to the debt of the nation. So the money comes from nowhere, yet somebody has to pay it back in taxes. And that somebody, by the way, is you. We've got a massive student loan debt crisis that's in the trillions, massively underfunded Social Security and pension plans. We have a looming trade war with China and an unpayable debt into the trillions. And it looks like we'll need more going into the future. All of these things do not exactly point to a strong real estate market in the USA, particularly in cities. Now, nobody has a crystal ball, myself included. We don't know what's going to happen in the future. All that I can do is direct your attention to the situations that are happening. You have to ultimately make that decision. Is it possible that real estate will continue to go up? Will it be resilient? Yes, it is possible. But due to all of these things, these impending scenarios, I think that's highly unlikely. It's up to you to make that decision. I'm going to put the video link to why I left the city and how you can too right here. Will we see a stock market crash this year? That link is down below. Please like and subscribe, and thanks very much for watching.
You are listening to Franchise City.